So now, when talking about technical analysis is pretty much the framework in which any forex trader really studies price action or the movement of price. Now, the theory behind technical analysis itself is that a person can pretty much look at a historical price movement and determine the current trading conditions for a potential price movement. Now, when really looking at technical analysis and reading price action, the ideology behind trading is where price is more likely to move next. You know, what side has a higher probability. Now, typically when you trade, there's only two sides you could really take, which is going long or going short, right? So it's all about building a list of confluences or following a certain strategy, right, that will help you make this decision. Now, typically the main evidence for using technical analysis is that, you know, theoretically all current market information is reflected in the price. So for example, like if price reflects all of the information that is out there, then the price action is all one would really need to make a trade, right? So typically you're not going to need a million indicators, right, on your screen, or a bunch of random lines out on your screen either. Typically all you really need is price action to actually trade. Now, the biggest reason to actually study price is to look at the patterns and what price does at certain levels, and really overall study the market patterns themselves, read how price moves. Now, price is going to move very differently for each and every pair. No pair will move exactly the same, right? So now if we take a look at the actual price action chart, right, all we're really going to be reading are the individual candlesticks here, and we're going to be looking for what price could probably do next, right? So if price, again, you're going to learn about support and resistance later on, right? So, you know, once you kind of get to that video, you can always come back and reread this one. So we're going to be looking for the next high probability trading setup, right? So let's say price at this black line here at this specific level, right, this level of support had rejected this level of support, and sellers actually maintained that level, buyers maintained this entire level of support, right? Then what I'm going to be looking for is for price to test that level of support, and the probability of price to continue to go down, since sellers have held this support for quite some time now. The probability of price to continue to go down is a lot higher than the probability of price continuing to break out to the upside. How can we tell this? Well, it's all about reading price. The candlesticks are getting smaller towards this area of previous support, now turned into an area of resistance, as you can see here, right? We also see big wicks to the upside here, right? So the probability of price to actually reject this level and go down is a lot higher than price to actually continue to go up. Now, of course, I could easily be wrong in this. No technical analysis is always going to be 100%, right? So after we perform our analysis, we look at the risk versus the reward, which one tool you could use here is a long or short position. So if I were to enter a trade here, where would my stop loss have to be? Well, preferably I would like to enter my stop loss above the high of this specific level. Now, where would my targets go? Well, you know, if price rejects this level of resistance, price is most likely going to go back down to support, which could be found in this zone or this box down here. Well, can I at least get, you know, at least 1.5, 2 times my risk? Now, we could see on this specific trade, right, if I do take it, I can at least obtain a little bit more than 2 times my risk, meaning I'm going to make, you know, I'm going to be risking $10 to make $20, $100 to make $200, $1,000 to make $2,000, right? It's a little bit more than that. The risk reward ratio is a 2.62. So it's a little bit more than that. So after you perform your analysis, you kind of look at the risk and what type of risk you're going to take on the trade, and then look at the probability along with risk versus reward. Now, you know, in the world of currency trading, when someone says technical analysis, the first thing that comes to mind, it really is a price action chart. And all you really need is that price action chart. You don't really need all these big and fancy indicators. So you can actually just, you know, perform your analysis without any confusion. Now, typically, you know, reading price action will really come with, you know, back testing and really learning about the market and having experience in the market. Now we're going to be going over more of course later on in the course, more sections on how to actually read price action, how to actually read momentum. But when it comes to technical analysis itself, traders are typically, marking off areas of support and resistance on the chart, looking at the overall trend and reading what price is doing itself.